Have you ever been told that checking your credit score is bad for your credit? That just by looking at the number, you're somehow damaging your financial health. It's a persistent rumor, and for good reason. For decades, the process of getting your credit score felt like a high-stakes game. You had to request it, often pay for it, and then worry that the very act of a credit bureau seeing your request would cause your score to drop. It was a vicious cycle of wanting to be informed but being afraid of the consequences. But times have changed. The rise of companies like Borrowell has completely upended this old way of thinking. They've made checking your credit score not just free, but something you can do weekly, even daily, with a few clicks on your phone. But this brings a new question to the forefront, a question a lot of you have been asking. Does checking my score on Borrowell affect my credit? The short answer is no. But that short answer is hiding a really important distinction that you absolutely need to understand if you want to be smart about your money. To get to the bottom of this, we need to talk about the two different types of credit checks, soft inquiries and hard inquiries. And understanding the difference between them is the key to unlocking your credit potential. Let's start with the hard inquiry. Think of a hard inquiry like a formal job interview. It happens when you are actively applying for new credit. This is when a lender, like a bank or a credit card company, pulls your full credit report to make a lending decision. They want to see your complete financial history because they're taking a risk on you. They're trying to figure out if you're a good borrower, someone who is likely to pay them back. This kind of check is a big deal, and it's something you typically have to authorize. Hard inquiries show up on your credit report for everyone to see, and, yes, they can temporarily ding your score by a few points. The reason for this is statistical. Lenders have found that people who have a lot of hard inquiries in a short amount of time, like, let's say, 6 or more in a year, are statistically more likely to default on their payments. It signals to a lender that you might be in a desperate financial situation, applying for credit everywhere you can get it. So, while a single hard inquiry might not be a huge deal, a bunch of them can look like a red flag. Hard inquiries stay on your credit report for up to 2 years, though their impact on your score usually fades after about a year. So, what counts as a hard inquiry? Applying for a new credit card, taking out a mortgage, getting a car loan, or applying for a personal loan are all classic examples. These are moments when you are asking for a new line of credit, and the lender is doing a serious, formal investigation into your finances. Now, let's talk about the soft inquiry. A soft inquiry is the polar opposite. It's like a casual conversation, not a formal interview. It's a request to look at your credit information, but it's not tied to an application for new credit. The most important thing to remember about a soft inquiry is that it has zero impact on your credit score. None. Nada. Zip. So, what falls into the category of a soft inquiry? Well, the most common example is when you check your own credit score. When you log into Borrowell or another similar service and look at your score, that's a soft inquiry. This is the crucial distinction. Borrowell is not a lender. They are providing you with your credit information, and when they do so, it's a soft check. This is why you can log in, check your score, and refresh the page 100 times a day if you want, and your score will not be affected. The same goes for when a potential employer runs a background check or when a credit card company sends you a pre-approved offer in the mail. These are all soft inquiries. They're just peeking at your credit file, not making a formal lending decision based on it. They are not a red flag to future lenders. This difference is so important because it completely changes the game of credit management. For years, people were told to fear their credit score. Now, services like Borrowell have made it possible to treat your credit score like a dashboard for your financial health. Instead of being afraid to look, you should be actively looking. It's a tool, not a threat. And this is where Borrowell really shines. They give you free, weekly updates on your Equifax credit score. And because it's a soft inquiry every single time, you are in no danger of hurting your score. This regular access to your score and credit report is a massive advantage. You can see how your financial habits are directly affecting your score in real time. Did you pay down a credit card balance? You might see your score go up next week. Did you accidentally miss a payment? You'll see the impact, and you can take action to get back on track. Another huge benefit of this constant monitoring is catching errors or fraudulent activity. Credit reports are not perfect. Sometimes there are mistakes. Maybe a payment was reported late when you know you paid it on time, or maybe you see an account you never opened. With weekly updates from Borrowell, you can spot these errors right away and dispute them. This is a critical part of protecting your financial identity and ensuring your credit history is accurate. If a mistake goes unnoticed for years, it can be a real headache to fix, and it could be costing you valuable points on your score. So, let's recap the core concept here. A hard inquiry is an application for new credit. It's a formal process, and it can temporarily lower your score. A soft inquiry is simply a look at your credit information. It could be you checking your own score, or a company pre-approving you for an offer. Soft inquiries do not affect your credit score in any way. Borrowell uses a soft inquiry to provide you with your credit score and report. This is the whole reason they can offer a free, no-risk service. They aren't applying for credit on your behalf, they are simply retrieving your own information for you to view. It's like you're pulling the information yourself, but through a user-friendly platform that helps you understand it all. So, the next time you hear someone say that checking your credit score is bad for your credit, you can confidently tell them they're thinking of a hard inquiry. And you can explain the difference. You can tell them that a soft inquiry, the kind used by services like Borrowell, is not only harmless but is an essential part of responsible financial management. It's a tool for empowerment, not a weapon against your score. By actively monitoring your credit, you're not just watching a number, you're taking control of your financial future. You're learning how your habits affect your score, you're catching potential errors and fraud, and you're putting yourself in the best possible position to get approved for credit when you actually need it. With that said, thanks for watching, and until next time.